I'd like to start off with just a quick reflection on the origins of Cleanwatts. We were founded in 2020, about a month or so before the pandemic actually kicked in. And it was the result of 5 of us as co-founders getting together, inspired in terms of simplifying, amplifying, and accelerating the energy transition. We didn't start off with a blank sheet of paper. So at the center of Cleanwatts, we placed the successes and achievements of a company in Portugal, software company called Virtual Power Solutions, VPS. And that had been founded in 2012. So by the time 2020 rolled around, we had a platform that had already proved itself as an energy efficiency engine for behind-the-meter optimization, visualization, management, and control of loads. And clearly, during that time, we'd already seen the beginnings of front-of-the-meter capabilities. And so we got together sort of in January of 2020, about a month before the pandemic, to get our heads together and think about how to sort of expand and articulate this area for the benefit of local energy markets. And one thing that we noticed right away when we took stock of the landscape was that there was already, and this is prior to the pandemic, about 50 million people in Europe affected by energy poverty, right? That number's shot through the roof over the course of the last couple of years. We're now looking at over 100 million people just in Europe alone, right? Affected by energy poverty. The other data point that we had was that it took 120 years for us to get to 27,000 terawatt hours of electricity demand locally. That number is expected to rise to 50,000 terawatt hours in the arc of the next 2.5 decades. So it leaves us precious little time to figure out at the low voltage and medium voltage part of the grid how to solve for that challenge as we electrify heating, cooling, transport in all the local areas in which we live, work, play, and live out our lives. And the third sort of consideration was that low voltage part of the grid is really kind of ill-equipped, if you will, to withstand the level of demand in electricity. And so reframing the relationship that we all have with energy was also a critical component of our strategy. And that's what moved us into a conviction, sort of our first leap of faith moment that took place about 1.5 years in, right? So we had done all the sort of the structuring and the repositioning, et cetera, but the real sort of leap of faith was about March or so, this time 3 years ago, right? So 2 years ago, pardon me. So March 2021. And we kind of said, okay, well, everyone's talking about energy communities. Here we are doing airports and hospitals and hotels and banks and all those kind of behind-the-meter environments. Why don't we just stop doing all those things and figure out how to actually crack the code on originating and managing energy communities? We've got a platform that's holistic. Let's look at the other components. And one of the first things we recognized is that this entire energy transition, when it gets down to the brass tacks of local energy markets, it's not going to be fixed by digital alone. It's not going to be fixed by infrastructure alone. And it's certainly not going to be fixed by financial capital alone. You kind of need all 3 of those vectors to work in synchronicity. And we kind of took out a blank sheet of paper and said, okay, well, let's start figuring this out. Now, we're based in Portugal. Fortunately, Portugal was one of the first countries to come out with the adoption of the European Union's directive on renewable energy, which includes very clear definitions on what an energy community is, how it should function, how it should structure itself, et cetera, et cetera. And so we took stock of that and said, all right, well, let's figure out here in Portugal, right? What does that mean? And so we started dividing up and segregating activities into 3 neat compartments. So under Cleanwatts umbrella, we've got an operating entity and people dedicated to the digital part. We've got Cleanwatts Energy Projects, and that's where effectively the rooftop under which we actually articulate the allocation of financial capital from third parties and convert it into physical infrastructure. And then we have another entity that actually manages the day-to-day operations of energy communities. And this is how the business model actually is deployed in Portugal. It's a model that starts off with an anchor client. So we effectively have, it could be a CNI rooftop, it could be a municipal rooftop, an office building. The defining characteristic for an anchor client for us is a sufficiently large surface area on their rooftop with strong enough irradiation rates to convert a substantial amount more energy in solar PV terms than what they would otherwise consume, right? So we sign with that anchor client a 15, 20-year PPA at a fixed cost giving them already an immediate abatement of cost on the energy that they would otherwise obtain from the grid to the tune of about 30, 40, 50% sometimes, right? So they're still connected to the grid, they're just getting two bills, right? One from front of the meter, another one from Cleanwatts for behind the meter. And of course, we cover all the CapEx elements with our financial capital partners. And so the entire experience is an OpEx discussion. It's not a CapEx discussion. Now, clearly, if they consume 30% of the energy generated on the rooftop, that leaves about 70% that's still excess, if you will. And so through Cleanwatts OS, our platform, we connect effectively all those excess electrons to as many community members as we can connect out to and reach into. And so we sign contracts with each of them as per the transposition of the European Union directive into law in Portugal. What that means for the community member is that they can actually consume electricity virtually that's actually generated locally. And so with each of those community members, what ends up happening, whether they're residential, small, medium-sized businesses, other CNIs, municipal buildings, and so on and so forth, is that they receive effectively two bills. Through the smart meter, which Portugal fortunately has rolled out everywhere, we're able to actually triangulate how much excess electrons were generated locally. The DSO takes a look at those 100 kilowatt hours that community member has consumed and recognizes that maybe 30 kilowatt hours are actually in virtual real-time matched to their consumption and our excess. Therefore, the 70 kilowatt hours that are remaining become effectively green flag for the retailer to go ahead and invoice for that amount. So the community member gets two invoices, and for the component of energy that they consume from our side, so locally generated and shared, they're looking at roughly between 20 and 30% savings on their energy bills, which these days is very welcome. And then any electrons that are not matched virtually to either the community members or the anchor client make their way into the grid through a merchant. So we have an underlying contract with an aggregator that we sweep all the excesses and offload them into the wholesale market. Bottom line, every electron finds a monetized home. Now, it's not all about generation. There's obviously behind-the-meter optimization, because every ounce of energy not consumed behind the meter creates, by default, more energy to be shared for the energy community, and that's great. That's good for everybody. But on top of that, energy generation is really the first level of investment that's kind of on demand, if you will, by the energy communities that we serve. The next logical step is storage, EV charging stations, heat pumps, all manner of transition assets that, frankly, everyone wants. They want the benefits of it, but very few people actually have the wherewithal, the capital, the treasury ability to go ahead and expedite that investment. And so being able to match impact funds, infrastructure funds to our business model and then deploy that capital is really an accelerator for that whole transition to happen in Portugal. I would be remiss to say that none of this would be possible if we didn't have a platform to manage all the ebbs and flows of transaction, right? So I mentioned optimization. I also mentioned sharing, so that's peer-to-peer considerations, settlements of flows, right? Remember, you've got an investor in the background, you've got the grid to pay, you've got taxes, so insurance providers and so on and so forth. So there's a lot of ebbs and flows of settlements that need to be handled on a day-to-day basis. And fortunately, our platform actually covers all of those things by design. This page probably does a good job at just giving you a feel for how we're set up in terms of user interfaces that handle, on the one hand, so starting over here, behind the meter, you've got effectively a behind-the-meter set of capabilities and functionalities for the residential space. Then you've got the same kind of thing, but more articulate for CNI landscapes. And then on the front-of-the-meter side, you have a number of different things. Trading desks, you've got flexibility services, so congestion management, demand response, et cetera, appreciating that all these assets that are in play, consumption, generation, and storage, are effectively part of the solution to mitigate the otherwise high cost of overhauling the entire low voltage part of the grid, right? And since we don't have time nor money to do that part of work, then we have to appreciate that every country is going to start to open up the capacity markets similar to Italy and other countries in Europe at the time being. And then so in the middle, what you have then is all the competencies and requirements to be able to handle all those different settlements and flows, right? And so what this means is you're able to actually, allow clean energy to be affordable, accessible, right, for members of local communities. You're increasing the security of supply, right, especially important as we transition away from fossil fuels. And all over Europe, you've got countries that are different situations vis-a-vis that particular challenge. You're also able to unshackle and generate new forms of revenue, not only for the asset owners, but also for the grid in terms of abating costs that they would otherwise have to handle and incur to accommodate these sort of intermittencies and challenges of the transition inherent to where we're at. I think everyone in the room understands and appreciates what that means. And then finally, the savings on the optimization side, very important to highlight in this context as well. One particular case study that I want to just share here, a winery in Portugal, 1.5 megawatt installation. We currently have 15 members, community members tied to this particular anchor client. So in total, consuming roughly about 15% of the energy generated on that rooftop. A big chunk, of course, is for the anchor client themselves. And gradually, we're increasing with every week that passes the number of community members that tie up to that community. In total, the amount that they would have spent in energy was around 1.4 million euros in terms of total demand for electricity and what that would translate into. With this solution, we're abating the cost by about $400,000 a year. And so a net result of about 31% savings. If I take a step back and look at our whole portfolio right now, we've got a backlog this quarter of signed contracts which are either built, being built, or ready to shovel for about 53 megawatts worth of capacity. And that represents about 130 communities. So super exciting to see. And that's just Portugal alone. We're opening up the pipelines in Italy and Spain, two other countries that are very ambitiously moving forward on energy communities. And then Austria is also in our sights. These are countries that we feel are sort of in lead position on the transposition of the Renewable Energy Directive into national law. Of course, we are looking at the rest of Europe too. It's a directive, so it's not a question of if, but rather when. And then in the States, we're working specifically in the northeast quadrant of the US, where progressiveness is really kind of reflected in legal frameworks and the allocation of capital, tax credits, et cetera, et cetera. So those are all in play. And the best proxy for an energy community for us right now is microgrids, but you've also got community solar in the States too. And so if I look further down into the year, by year end, we'll certainly be in around 200 megawatts worth of total capacity. And so we're right now working with infra funds, impact funds that are ready, willing, and able to conveyor belt the capital, convert it. And so anyone in the room who's of that ilk, I'd love to connect with you and just give you more detail on that. Wrapping up, just really quickly, we worked really hard over the course of last year to set the framework for growth for Cleanwatts. We are a team of 130 employees now, vast majority in Portugal, but we have a team of about 10 people in Italy and half a dozen or so in the States. So we are growing. We closed our round last year in June, Series A with Verdane Capital. Could not be happier about who we landed with, and just a shout out to the Verdane team in case any of them are in the room. Super thrilled to be working with that team, and frankly, it's a head nod to how venture capital ought to work. Right, these folks are committed to help you on all axes, whether it's go-to-market, technology, finance, operations. They're always there. I can always count on them to be there and help me out. So, really cool. And so I just, I think the values part was really, really important to set the North Star for the company. If you don't set sort of structure and clarity around some of these things, then you'll find it really difficult to grow fast. With that, I'm going to wrap up. And if any of this was exciting, inspiring, I invite you to reach out. We're here, and we also have a stand in the next room.